The Mastery Mindset Podcast channel. The Wealth Series. Master your mind and unleash your potential. Hey, folks. Welcome back to the Mastery Mindset Podcast channel. I'm thrilled to have you here with me today. We've got an exciting episode lined up. We're talking about the stock market secrets. Generating passive income. So, grab your favorite drink, find a comfy spot, and let's dive into the world of financial possibilities. Alright, let's kick things off with a fundamental concept. Passive income. Now, we're not talking about working harder, but smarter. Passive income is like having a money-making machine that works for you while you sleep. It's the dream, right? Now, let me break this down for you. Passive income is essentially money that comes in without requiring your active involvement on a day-to-day basis. It's the sweet spot where your assets are doing the heavy lifting. Imagine having a team of financial assistants working 24/7, and you get to reap the rewards. Passive income comes from various sources, and we're not just talking about your typical 9-to-5 job. Think dividends. Those regular payouts from stocks you own, where you essentially get a share of a company's profits. Real estate is another player in the passive income game. Owning property that generates rental income is like having a silent partner that contributes to your financial success. Now, let's get into the nitty-gritty. This isn't a get-rich-quick scheme. It's about strategic investing and making your money work for you. It's the difference between trading your time for money and having your money work tirelessly for you. So, buckle up as we explore the avenues of passive income that can turn your financial dreams into reality. Before we dig into the secrets, let's make sure we're all on the same page about the stock market. It's not as complicated as it seems. Think of it like a marketplace where people buy and sell shares of companies. Now, why should you care? Well, that's where the passive income magic begins. Imagine the stock market as a bustling marketplace where the currency is shares of ownership in companies. It's a dynamic environment where individuals, institutions, and investors come together to buy and sell these pieces of ownership, also known as stocks. Now, why should you care about this market jargon? Because understanding the stock market is like having the key to a treasure chest of passive income opportunities. Let's delve into this a bit more. Take a company's dividend-paying stocks, for example. When you own these stocks, you're not just a spectator. You become a shareholder, a part owner of that company. And guess what? Companies often share a portion of their profits with their shareholders in the form of dividends. It's like being on the receiving end of a gift from Santa Claus, but instead of cookies and milk, you're getting a share of the profit pie. Some companies are incredibly generous, regularly sending out these dividends. And who doesn't love a steady stream of financial gifts? So, the stock market is not just a place of numbers and charts. It's a playground where you can strategically position yourself to receive these financial gifts regularly. Now, let's explore how you can make this market work for you and turn these shares into a source of passive income. Now, let's talk about the bread and butter of passive income. Dividend stocks. These little treasures can be your secret weapon in the stock market game. Picture this. You invest in a company, and they pay you a percentage of their profits regularly. So, what exactly are these magical instruments called dividend stocks? Well, think of them as financial wizards that reward you for being a loyal shareholder. When a company is doing well, they often share the wealth with their investors by distributing a portion of their profits, and this is where dividends come into play. Let's break it down with an example. Imagine you own shares in Company X, and they declare a dividend of $1 per share. If you own 100 shares, congratulations, you just earned yourself $100 without lifting a finger. It's like getting paid simply for believing in and investing in a company's success. But here's the kicker. The more shares you own, the more you earn. It's like having your own money tree that keeps growing, and who wouldn't want that? As you consistently invest and accumulate more shares, your passive income stream steadily increases. It's a beautiful cycle of growth and financial reward. Now, let's explore some real-world examples of companies that have been consistent in their dividend payouts. These aren't just stocks. They're reliable sources of income that can contribute significantly to your financial well-being. Stay tuned as we uncover the secrets of building a portfolio that stands the test of time and consistently delivers returns. Alright, we're having fun, but let's be real. The stock market isn't a fairy tale land. There are risks, and you need to be prepared. Think of it as a roller coaster ride with a few bumps along the way. Now, I don't want to rain on the parade, but it's crucial to acknowledge that the stock market is not a guaranteed smooth ride. It's more like a roller coaster, complete with exhilarating highs and stomach-churning lows. But fear not, my fellow investors, because there are strategies to navigate this financial roller coaster and come out on top. Diversification is your first line of defense. Imagine you're on a road trip, and instead of putting all your snacks in one bag, you spread them out across different pockets. Diversifying your investments works the same way. By spreading your money across various assets and sectors, you reduce the impact of a downturn in any single investment. Understanding market trends is like having a weather forecast for your financial journey. You wouldn't leave for a road trip without checking the weather, right? Similarly, keeping an eye on market trends helps you make informed decisions and adjust your strategy accordingly. Now, let's talk about setting realistic expectations. Imagine you're on that roller coaster, and you know there are going to be twists and turns. If you're expecting a smooth ride without any bumps, you're setting yourself up for disappointment. Realistic expectations act as a seatbelt, keeping you secure when the unexpected happens. It's important to note that risk management isn't about avoiding risks altogether, that's virtually impossible. Instead, it's about navigating them wisely. By implementing these strategies, you're not eliminating risk, but you're putting on your financial armor, ready to face the uncertainties with confidence. So, buckle up, stay informed, and let's ride this roller coaster of financial opportunities together. Now, let's talk about a superhero in the world of finance. Compound interest. It's like a snowball effect that starts small but becomes a financial juggernaut over time. Alright, buckle up because we're about to dive into the financial superhero realm, compound interest. Imagine it as the Superman of your savings, quietly but powerfully working behind the scenes to make your money soar. Here's how it works. Compound interest is the process where your money earns interest not just on the initial amount you invested, but also on the interest that accumulates over time. It's a snowball effect that starts small but gains momentum, growing into a financial juggernaut over the years. Let me break it down with an example. Say you invest $1,000 at a 5% annual interest rate. In the first year, you earn $50 in interest, bringing your total to $1,050. Now, here's where the magic happens. In the second year, you don't just earn 5% on your initial $1,000. You earn 5% on the entire $1,050. So, you end up with $1,102.50. This process continues, and over time, your money multiplies faster than you can imagine. Now, here's the kicker: the earlier you start, the more time your money has to harness the power of compounding. It's like planting a seed and watching it grow into a mighty money tree. Patience is the key here. The longer your money has to compound, the more impressive the results. So, whether you're in your 20s, 30s, or beyond, starting now is always better than starting later. Compound interest is your financial sidekick, and the sooner you enlist its help, the greater the financial superpowers you'll have at your disposal. Stick around as we explore practical ways to leverage compound interest and turn it into your financial ally. And there you have it, folks. The not-so-secret secrets to generating passive income through the stock market. It's about understanding the game, embracing the risks, and letting time and strategy work in your favor. I hope you enjoyed our journey today. If you found this information valuable, give it a thumbs up, share it with your friends, and let me know in the comments what you'd like to explore in future episodes. Before we wrap up, don't forget to hit that subscribe button and ring the notification bell so you never miss an episode. Thank you for joining me on the Mastery Mindset podcast channel. Until next time, stay curious, stay invested, and keep mastering your mindset. See you in the next episode.